Hello traders, it's Samurai Trader here. This is a follow-up recording from a number of videos that I've recorded the last few days, and I've really got the emails firing off and Skype calls coming in left, right and center, etc. And a ton of questions from the general public and from students re trading without indicators. One of the greatest challenges for traders is information overload, and for most newer traders and even experienced traders, they've got so much stuff on their charts that they can't really process the amount of information. So what I've done is the last few days done a number of videos on showing you how to trade without indicators. Now what we're about to cover is a couple of live trades that I took this morning. This is a general public version, that is, I recorded this live earlier this morning for my students and gave them a really good rundown. So some of the information I won't be disclosing here until you become a student, but I will give you still great value for the time and effort you take in watching this video. Now if you're new to my videos, or you haven't read one of my disclaimers before, if you could please read that would be great. Also, if you'd like to please go to full screen down the bottom right hand corner here. You'll be able to go to full screen, because what we're going to be doing is looking at some charts in a moment. Now just one thing I want to point out is that I personally believe the best way to trade not using indicators is to be a trend follower, that is, to trade with the trend. And when I analyze the indicators I use, that is, say if I'm using a MACD or some of the others, it's really to help me fine-tune my entries on the counter trend trades. Now I'll show you one technique how to get in on a counter trend trade without using anything else but some moving averages. So what I'm about to show you are screens without standard indicators such as stochastics and MACDs and RSIs and all that sort of thing, but I do have 4 moving averages on there, and the reason I have those on is for trend direction and also for what I call extended moves. Now the best way to learn how to trade, or if trading hasn't been working for you, is to become a sniper. A sniper, of course, and when you slip into the mentality and you understand how a sniper operates, one shot, one kill. We as successful day traders are rules-based traders. We're waiting for a pattern to appear, and we've got our rules that we stick by, which is absolutely critical to be truly successful. Now if you haven't already done so, just before we go to the charts, subscribe to my YouTube channel, and I do for my students on average 2 to 3 much more in-depth training videos every week and keep them updated. And traders, I'm a researcher and I day trade every day, and because of my students and emails I receive, and I probably get 10 to 20 emails a day, questions about this and that, I'm always looking at drilling down, how can I make this better? How can I use this? And that's really drives me. People say to me, why do you train? Well, I love training because it's made me a trader 100 times better than what I used to be 15-20 years ago, because I'm constantly saying or thinking, how can I do this better? What can I pass on to my students? And just the feedback I get from my students, just to tell you what, it really drives me. It's my passion. So if you're looking at learning how to day trade is $197. There is no upsell. Yes, you can hire me as a coach for $5,000 a day, because it stops me from effectively trading. I prefer just to day trade personally, because in the fast track program I give you full email support anyway, and you get all the updates, everything you need there, and it's the last $197 or the last course you'll ever need to purchase. But anyway, you can drop me an email or go to the website to invest or to purchase the program. So let's go and have a look at the charts here, because I want to show you some things here. So this is the exchange time, which you can see down here. So sorry, you just can't quite see it, it's a bit below. So this here is about 13:15 right here. So what we've got for my newer traders, we've got a 200 EMA, 89, 34 and an 8. And we've got a trade set up we call down here a T20 So T21 is the first trade after a T20, and this was also what we call a 34 bounce. Now what you can see here, I'm really following the yellow line. Now as mentioned earlier, I normally trade the NQ, and so I wanted to do these trades on the ES because I've got so many traders now that trade the ES, which is the most liquid futures contract in the world. So I thought, well, what better ways to really fire off some trades here. So what I've done here is, and for my students, you know what this is. This is a T25, and it's also a 34 and an 89 bounce. So it's a very, very high probability trade. You get in on the close of a candle. That was good for 5 ticks. Now you can see the 10 up there. I trade 10 lots, so that was out at 625 less commissions, or $62.50 per contract. Now just on this point, one of the most common questions I have, and I've done a lot of recent videos, or I've done a number of videos on this recently, what's a sensible daily target? And I say around $200 is really achievable. You might want to go a little higher than that to allow for your lost days, or if you're happy netting $100 a day, target 200, and if you have a down day, you've got your butt covered. Okay, so your stop on this particular one would go down either 1 or 2 ticks below here. So you've either got a 4-tick stop or a 5-tick stop for a 5-tick gain. Now as you can see here, I would have romped 6 ticks in here. Likewise with this one here, I got in, I would have romped 6 or 7 ticks in there. I got out both of those at 5 ticks each. Now 4 of these trades a day, and very mechanical, and as you can see, the only indicators I was using was simply a little trend line, and we had, by the way, we had another one just here that I didn't take, exactly a T25 here, which was good again for another 5 or 6 ticks. But in this particular case, I was waiting for the pullback. Now I will confess one thing here, I got in a little early. I did not wait for the candle to close. Naughty. And traders, you hear me preach this all the time. I should have been in on the close of this candle. It would have been the same price, but this ticked down against me 3 ticks. But once again, my stop was under here, and it was still lovely profitable trade. But wait for the candle to close, I recommend anyway. So one thing I did want to show is that this down here, and my little comment here was, note price action away from the 8 EMA. Notice how we've got angulation. We're moving right away from the 34. So for the counter trend traders that are looking at simplifying their charts, look for this angulation away. You can see that angle, that wedge formation, and notice how price has moved off the 8 EMA. Let me get this right. Sorry traders, long morning. Notice how the price has moved away from the 8 EMA. Okay, that's a really good indication, and it's a great scalping opportunity for the traders, the counter trend traders. However, do not please counter trend trade until you've mastered, that is, your profitable trading with the trend. Because here is a trend trade, you've got another one here, you had another one there, you've got another one, they're firing left, right and center. So the point here is that you can successfully trade all of these. But you've got here an 89 bounce, an 89 bounce, you've got a 34 89 bounce there, you've got a T25, another T25, you've got another T25, all trading with the trend without a stack of indicators on your screens. So the trading opportunities are left, right and center. Now I prefer, and look at this, a great now this, by the way, this is 9:46 in the morning, nice 34 bounce. We've rolled over. Remember the rule, when the 8 EMA goes under the 34, we're looking for short trades. When we're above, long trades only. So we've gone under here, you've cut through on your T20, you've had your first pullback, you've now got a T25, close there, and bang, away it goes. A pullback, you've got a T34 and a T1, bang, away you go. What I was about to say there is I still love to have on my charts my stochastic and my MACD, my platinum, because I still like to take these, and I just think it makes it a little easier. However, if you like the idea of keeping your charts really simple, you can really learn to trade with the trend. Just remember, follow the yellow, and the blue. And the sweet spots. Now, what's the sweet spot, by the way? When the yellow's above here, when the yellow's above the 89 and the blue's above the yellow, these are the sweet spots, and you'll get these fire off left, right, and center every single day. This is what you want to avoid. Notice here you've got congestion here. You've got EMAs going through and threading. It's threading the needle. Now here we come through. We have a T20. You come through and you have your first pullback to the 34. That's what we call a T21. The first pullback after a T20. Bang, away it goes. You can trade those alone every day. Okay, you first cut through, your 8 goes through the 34, you pull back, bang, away you go. Traders, I hope this was helpful, but this is a follow-up once again with trading, and they just do, for my students, I fired off two live trades just to show them the possibilities of trading. So traders, it's a winner. You can trade very successfully without indicators. See you on the next video.